When you look at robo-advisory portfolios in general, my view is that I don't think that they offer something that's really quite tremendous. When you really kind of unpack it a bit, it's 3, 4, 5 ETFs. You can probably buy these commission-free. You can buy them commission-free on our platform. My view is that if you just buy, for instance, the S&P 500 or the NASDAQ or whatever ETFs over a longer period of time, you end up with a very similar return as you get with some of these diversified portfolios, and they're charging you fees.
Welcome to Couchonomics with Arjun. The show aims to unravel the layers of the fintech sector and the rapidly evolving tech startup ecosystem across the MENA region and beyond. I am your host Arjun, and I will be inviting founders, executives, investors, regulators, and other influential stakeholders to discuss and dissect the highs and lows of their own ventures and how they foresee the wider ecosystem evolve. Join us as we celebrate success and the spirit of risk-taking, the candid discussion that goes past the timid question and cautious answers. This show is produced in collaboration with Adyan, a reliable end-to-end payment solution that enables businesses to turn payments into a strategic growth driver. We're also brought to you by Lulu Financial Group, a global financial services provider headquartered in Abu Dhabi and operating in 11 countries. Finally, Couchonomics with Arjun Singh is brought to you by M2P Fintech, Asia's leading payment infrastructure company that enables businesses of any scale to embed financial products. Welcome to today's episode of Couchonomics with Arjun Singh. I'm your host, as always, Arjun, and I'm joined by Feras Jalbout, who is the founder of Baraka, which is a WealthTech app, which has been in the market. I think it was launched a couple of years ago. I've known Feras for a couple of years. So with that, welcome, Feras.
Thank you for having me.
A fist bump is, I think these days, allowed. Maybe handshakes too, right?
Yeah, it's all good now.
Yeah, it's all good now. Well, yeah. So Feras, thanks for coming in. I use Baraka, so I should acknowledge that.
I'll be able to know.
Yeah,
so.
you do know
Yeah.
that. So I do use, and thanks.
We've only been around for a year, actually.
It's only a year.
Yeah, not even.
Okay, not even.
We haven't launched.
So let me correct myself then. Baraka has been around for a year. I feel like it's been a couple of years, but I do think the last 3 years has been a bit of a blur with all COVID going on and stuff like that. I did want to say thank you for the hamper that you'd sent me with the Hulk t-shirt. I don't know if it was...
Disappointed you're not wearing it today.
Well, apologies, but it had Elon Musk on it, and I'm not quite sure I'm allowed to wear that. So, I might be in some copyright infringement. Right. So the way these are designed for us, as I was telling you, these are 25 to 30 minute podcasts, okay. Or actually now we have a video version to which is going out. So we're going to dive right straight into it, right? And have a bit of a chat,
sure.
Right? So let's start with Baraka.
Yeah.
Give us a bit of a story. What's the backstory here? How did Baraka come into being? Where are you on the journey? Kind of what's immediately next for you?
Okay. So, like I mentioned, I've been building the company for 2 years, but we've only launched about 10 months ago.
Which is the fact I told. I've known you for 2 years.
That's right, That's right. And before that, I was an investor for a long time, for about 15 years. And so I spent about 10 years in asset management doing...
So you started investing when you were about 11 or 12 then?
Yeah, I was 12. And so by the time I was 22, I had 10 years of experience. And so I did that for a long time, right? I was in asset management. I worked for a couple of international private banks, and then I worked at a family office /VC. But really, this is very close to home for me because I'm really just kind of driven by the mission. I genuinely think that more people should invest, and at the time there was far fewer options to invest in the region. And so that's what really drove this kind of push into this field, was to kind of create something that a lot of people in the region can use to access financial markets. And so that was my passion and my mission. And that's what kicked things off, really.
That's how it started.
That's how it all started. Yeah.
So where are you on your journey now?
So like I mentioned, we've launched now. We're regulated here by the DFSA. We have, we've been live for about a year.
And here being the UAE.
In the UAE, that's correct.
Are you planning to go across to the Saudi market soon?
We are exploring different markets. I mean, it's definitely something that's a lot of interest to us. We get a lot of demand from there, and actually, I'm personally very, very passionate about kind of bringing or driving access to local markets and other kinds of opportunities in the local market. I don't want to be just a one-way platform where we push money to international markets. I think that there's a lot of wealth to be generated here as well, and a lot of access that needs to be provided for the local population. So it's something that's very interesting for us.
Okay, so two questions. I'm going to ask you the first one and then the second one, right? So you obviously launched Baraka. You chose low commission or zero commission trading app. Obviously, Robinhood is either the poster child or the naughty child of the of the sector. But a lot of people actually say that a lot of this online trading is sort of it feels more like gaming and gambling, right? With a lot of ego-based investing, right? On the other hand, there is more the sensible cousin, which is, if I may refer it to as robo-advisory, right? What made you choose the former and not the latter?
This is a good question. There's several reasons. I think one of them is that, when you look at robo-advisory portfolios in general, my view is that I don't think that they offer something that's really quite tremendous.
Right. We should say that to betterment, but that's okay.
Yeah, and they're quite. These days, they're quite heavy on the fees, right? Between 50 basis points and 1% or whatever. And then when you really kind of unpack it a bit, it's 3, 4, 5 ETFs. You can probably buy these commission free. You can buy them commission free on our platform. And actually, when you look at the data, and this is not investment advice, but my view is that if you just buy, for instance, the S&P 500 or the NASDAQ or whatever ETFs over a longer period of time, you end up with a very similar return as you get with some of these diversified portfolios, and they're charging you fees. So that's always been my investment philosophy. And so not everyone can be disciplined enough to kind of continue to invest in these ETFs over time. We've just launched a feature that allows somebody to do that, to automate it and do it. And I think that, for me, that's a great way to invest. And so we're just trying to offer that as a service. You're saying that Robinhood is the naughty poster child because, because of the way that people trade, but that's somebody's prerogative, right? We've created a platform where people have the ability to invest over a long period of time. Actually, we don't make money off trading, and we don't necessarily want people to trade excessively. The idea is that you should be able to access, stocks and ETFs and invest in them over a longer period of time. So I think there's a bit of a disconnect as to what we're trying to offer and what's good for a customer. What we feel we offer is actually genuinely the right way to invest.
So you offer access.
We offer access.
And you're saying the prerogative lies with me.
Yeah, of course. I think that's a big part of it, right? And also a big, something that we've always done, and this, is that we've pushed a lot of educational material, right? And we've done this since we've started. We actually did this before we launched the app.
So you do push, and I do appreciate that. And I as I said, I do use your platform. But trying to answer the first part of the question to me is, firstly, do you buy into this statement, as ludicrous as it might sound, that online trading is part gambling, part gaming? Or do you think there is just more hype to that statement?
I think there's a lot of hype. Look, I'll tell you one thing, right? You can trade and you can invest.
Yeah.
Right? How are you, who decides what is what?
I don't know. But a lot of people just jump when someone famous actually gets on to Twitter and says something, and then
I think that was the case in the last few years.
Yeah.
And I think that was probably a moment in time. I don't think that's my personal view. I don't think that is persists over time.
Okay.
It might, But I think that a lot of people have woken up to the fact that, longer term investing is the way to go about, investing.
Which is what I agree. And I do agree that you could buy some of these indices and they work as good as
exactly.
as anything
and I think one of the things, you're picking on Robinhood, but there are like CFD platforms out there that give you, 100-to-1 leverage, right? Like, crazy synthetic.
Hey, I have nothing against Robinhood.
No, I know. I'm just saying, like, there are platforms out there that can really, cause you detriment and, really put a hole in your wallet and have you lose everything that you have, right? We don't offer any margin trading. Mm-hmm. And so it's really about just like cash equities, just investing over a longer period of time. And so I think the bigger piece for us in the region is kind of like educating a bit more, you know, trying to get people to understand that, like, you can trade, but that's not why we built the platform.
Are people receptive to that education? I know you put a lot of educational material out there. Are people actually consuming it?
Yeah, I think so. People kind of give us good feedback on it, and a large portion of our investors are first time investors, and they come to us and they
and there's no better time than now actually to be consuming a lot of that.
Of course.
Right.
Of course. I think a lot of the education piece is actually how to feel when markets are down, right?
Yeah.
It's not just about kind of
that's when we all don't feel intelligent.
Exactly. And so I think a lot of people panic, and I don't think that you should necessarily panic. Yeah. I think that there's a way to go about this. And so, one of the things that we'll do over time is try to educate people as how to feel as you invest, because I think it's really important.
I don't
not to feel too good when the market's doing too well, and not to feel too bad when the market's not.
Yeah, I don't panic, but I don't want my wife to know what my portfolio looks like right now. So that could lead to panic. Let me ask the second half of this question, and this one really interests me because obviously you have access to data. So obviously, fractional investing, when it sort of came around, it was sort of seen as this great shift towards democratization of investment, and the retail markets will get to participate because who could ever afford an Amazon stock at whatever thousands of dollars it was at, and I'm sure it played its role. Funnily enough, the data which came out, and actually it's very interesting. I was watching a Jon Stewart show last night. I think it's called What's Wrong with Jon Stewart. And he was covering the stock market.
Right.
Funnily enough, actually, we've seen greater concentration of wealth. So now the top 10% families own approximately 84% of the U.S. stock market. And this is after, Robinhood's been around for 10 years and a number of other platforms have been doing that. I don't know how to sort of compare and contrast with this part of the world, but have you really seen the fractional investments with yourself and your peer groups are offering? Have you really seen first-time investors come in large numbers?
Absolutely.
Right? And are these first-time investors basically expats who are accessing international markets? Or are they people who are from this part of the world who never had access to these international markets? In your case, the U.S. equities and ETFs who have come
in. So we are seeing first-time investors come into the market. We have a large portion of our investor base are first-time investors, and we're seeing on our platform specifically, we have a lot of local users that are accessing U.S. markets in our case. So we're definitely seeing that. And in terms of retail investors, the democratization and the fractionalization of investing, I mean, Robinhood is another example. Of course, we mentioned them, but 25 million accounts, right?
Yep.
25 million accounts only in the U.S. They're ushering in a whole new wave of retail investors in that country. And so are, 3 or 4 or 5 other platforms. And so we're doing this, to some extent, we're doing that here. How it plays out over time, I don't know. But there is a shift in mentality in the region. More people want access. More people want to, be invested for their future. So we see it for sure. And I think the point on I think you're making 2 points there on democratization of assets or fractionalization of assets and concentration of wealth. Mm-hmm. I think they're 2 separate points, to be quite honest with you. I mean, on the fractionalization bit, you can now buy a piece of, art. You would never be able to do that, or a piece of a building, in real
I want to
estate.
be able to buy a piece of a football club.
And
that's kind of what I was talking about last
and that's going to come, right? Like DAOs and, you see what's happening.
Yeah.
So all of that stuff is actually going to make its way to retail investors. Whether retail investors take it up or not will be another question. But like it's all happening now. And I think what will be interesting in the next wave, like there's a new platform out. I don't know if you've seen this, but they are democratizing access to franchise investing.
Okay.
Super interesting concept, because when you think about that, I mean, they have the ability to disintermediate the institutional capital that lays behind kind of these kind of traditionally private equity groups that back these kind of franchise groups. Super interesting.
Yeah, I want to know what that platform.
Yeah, exactly. But I mean, not to plug them, but like I think it's a very interesting concept.
Yeah,
and so more and more people can have more diversified access across different assets. And
so you're saying I should not try and use democratization and concentration of wealth in the same sentence?
I think they're two different things. I think that the rich are getting richer, but it doesn't mean that, you know, the retail investors don't have as much or more access than they used to.
They do, yeah, they do. I just hope that they are not the ones who are getting burnt, right, quicker. And that's what I fear, because, you know, the current downturn in the stock markets, my fear is it's those first-time investors or those democratized ones.
Well, I mean,
right,
some of these larger hedge funds are down, you know, reportedly down 40 and 50 and 60%.
No, they are.
You know, and so I think everybody's feeling the pinch these days. And I think it goes back to that point about education. I mean, it's really important to know what you're investing in. And I'm really encouraged by one thing. And so like the Robin Hood generation, if you want to call them, in the US or in other parts of the world, are growing up talking about investing around the dinner table.
Yeah.
And with their friends. It's become cool again. And so, like it or not, like these people will grow up knowing a lot more about financial markets than probably I did or their parents' generation did, because, you know, they read up on it and they invest and they care.
I'm sorry, man. I consider myself the Robin Hood generation. You're years younger than I am. So we've got this one wrong. We got this wrong. No, you're correct. I think you're correct in that way, that I think the markets, let's assume the people assume they're a lot more well-informed. Right.
Yeah.
The problem I have is there is substantial amount of misinformation also outside. Fair. So you know, I know loads and loads of youngsters who are incredibly swayed with what they read on Twitter and so on and so forth. And this is where my concern is that there's a lot of ego, a lot of FOMO-based sort of investments. And we'll come to those questions. That's fair. I do want to ask about crypto. Let's talk about wealth tech in this part of the world, right? Sure. So I've been here for about 10, 12 years. And for years, we saw nothing, right? And then all of a sudden, we started seeing, some of the platforms coming around. Yep. I think this activity all started maybe 3 years ago, maybe 4 years ago. I've lose count. So we had some wealth tech apps come around. We had some of the platforms which existed who started to sort of forward integrate and said, you know, let's put a front end and, you know, let's reach out to the customers. You then had some international players who, even though they were not sort of regulated yet, started to offer their services to people. You know, I trade on one of them quite regularly. And then, you know, the latest kids on the blocks are the crypto exchanges. And I think a number of them are now saying that they'll also offer equities, right? Yep. So this place is going to get, you know, if I may use the term, quite dog-eat-dog, right?
Absolutely.
At the end of the day, there is only a finite number of people. Even if you add the Saudi population plus the UAE, the net addressable market, I think, is less than 15 million, if not lesser, right? In terms of who can invest, right, into these, or are educated enough to. If you think it's a bit higher, then great, but you know, it's not 3x of what I'm saying. So how do you see all this pan out? Like, who do you think will kind of be standing at the end of this?
I mean, it's tough to predict. I think that, you know, as you know better than anyone, that it all converges in the end, right? Yeah. If you're building a consumer fintech application in any kind of vertical, you're probably thinking about other verticals, and we've seen that, you know, all over the world, right? Klarna starts as BNPL and now basically does everything, moving to become a full digital bank. That's one path. You know, that is one path, and we're seeing all these fintechs go, you know, attempt to kind of do that in certain ways.
They're talking about it. I'm yet to see anyone in this market successfully enter an adjacent sector yet.
Yeah.
I'm sure they will.
Sure.
But you think that's the only thing?
No, I don't think it's the only thing. I think there's different niches that you can carve out for yourself in fintech. But to strategize and to think about where that leads to over time, I'm not sure.
So what's your take? So what's Baraka doing? So where's your focus? I don't need the secret sauce.
Yeah, no, absolutely. It's not about secret sauce. It's really, we're trying to build a consumer fintech application around investing.
Right.
And so we want to offer real value. And I think that is, like we said, there are many different ways to invest. And so, how can we give access to people across different assets, and how can we make it valuable for them? And so I think there's a lot of innovation that's happening in that space, and we'll continue to evolve. And I could sit here and predict.
Are you going to offer crypto?
I think it's something that we're definitely exploring. What we tend to do is, think about our user base and what do they want, right? I think crypto is one thing, but there's other things that we've highlighted that could be interesting.
How easy are you finding in terms of accessing newer markets, right? Because if you look at the demographics out here, we've got a very large, let's say, populace out of India, right? But from what I understand, the Indian markets don't allow you access currently, right? Do you see those things changing? Do you see, is that because that could open a whole new market, right? Like just take the UAE, for example.
Yeah, I think so. Honestly, I think that, frontier markets in general will kind of open up over time. And so I think that becomes an opportunity for platforms like ours. If those capital markets evolve and become interesting for, retail investors. And I think that's possible.
Okay. So staying with the WealthTech play, right? So as they say, the winter is here now. From a
dark days.
Right. I've met a number of VCs over the last couple of weeks, and while none of them actually show their cards, all of them are very clear that they're going to be selective. So I don't think anybody is saying that they don't have the capital to invest, but they're getting incredibly. Or not incredibly, increasingly selective in terms of how they're going to deploy. If I take a step back as a startup, right, and yes, we've seen everything with Y Combinator wrote in terms of the letter which they sent to all their startups, and then I think Sequoia followed with something which is 50 pages long. I think most of those things are good ideas, and people should be following that even during good times, bad times. Doesn't make sense. They're sensible business ideas, right? How bad is it going to get here? Because everything I hear is it's getting hard now, and it's going to get harder in 9 months to 12 months, right? So what do you do as a business today in terms of going out and raising equity to allow you, raising capital for allowing you to grow?
If you have to raise, it's probably not the best time. It's not an ideal time to raise, that's for sure. I think there's a lot of question marks around kind of viable business models. And so it really depends on each person's situation or each company's situation. In our case, we're it's back to basics. It's almost like, we've reworked our business plan. We have longer runway. We're financially, very sound and very.
You raised recently, didn't you?
We did, yeah.
Okay.
And so, we're very comfortable with the runway that we have, and we're probably in a much more advantageous position than a lot of other startups. But that's not the point. I think the point is that you have to have solid unit economics. You have to, you can't overpay for growth. It's the lessons that that you probably read in the Sequoia.
But it's the lessons which, unfortunately, my generation grew up with. So.
Exactly. I think now it's kind of like it's back to those kind of basic lessons. And
so old guys like me are not back in fashion, right?
So if you want to launch a startup, this is the time.
This is the time to do it, right? Well, actually, some of the best ideas actually come out of hard times and stuff like that.
Yeah, and I don't think are VCs or are people not going to fund high growth companies in the future? No, I don't think that's the case, right? Like there's always a time for companies to grow and to get funded. That's not going to be the case. And there's always a place for innovation. There's always going to be capital for innovation. But I think the business models will be under more scrutiny. I think the last couple of years, it's been, a bit like finger in the air.
Yeah. We'll cut you the check, and then you can tell us what the business model is. I'm sorry, I'm being rude out here, but that is the truth. No, I think you're very correct, right? So there's enough dry powder in the market, or at least the LPs have not sort of gone back in and sort of pulled their money out, right? But I do think, as you said correctly, that the VCs are going to be incredibly prudent about what they invest in. I think a number of early stage businesses still have a bit more leeway. Because I guess the size of the check is
more manageable, right?
I mean, I do think there is a great opportunity for CVCs and for family offices, and potentially some of the incumbent financial services players to actually come into the market and flex their muscles, especially with sensible startups who are either willing to take a bit of a haircut on their valuation or are willing to sort of see a future where they're a part of a bigger sort of story, and they give away a certain degree of independence, right, in terms of that. But if you do need capital, you've got to make your way through. So it's not necessarily, but in this part of the world, and I have to say this, there's been too much of the Me Too, right? I'm sorry, that's my view. And this is not just WealthTech. Actually, there are other sectors, general. I'll tell you the sector I commentate most about, BNPL, right? It's kind of hard to see a difference between one and the other. And unfortunately, they're all fighting for the lowest common denominator, which is price, which is quite scary, right? I'm going to ask you this weird question, but do you really see a number of businesses disappear in the next 12 months?
I think that you will see some consolidation and some businesses go away. I don't think it's going to be catastrophic.
Okay.
I think that good businesses find a way to survive and even thrive. And, bad businesses will probably get folded into other businesses or, simply die.
So it won't be catastrophic.
I don't think it'll be catastrophic. I think that the fact that everybody's predicting, recession and catastrophe is either very, is like self-defeating or self-fulfilling. And I've never seen so many people predict such a deep recession.
No, but we can talk ourselves into this kind of stuff, right?
Exactly.
And that's the problem. And we've seen this happen in the past several times. And I'm going to switch now to the question. This is not asking you for financial advice. So I do want to...
Please don't. I get in trouble if
I do want to put that disclosure out there. but just as two people who are having, as they say, shooting the breeze.
Just sitting on this couch.
Sitting around the couch and having a chat, right? How much further do we have to endure the pain on the stock markets, right? Like, who could have ever imagined, people could have imagined. I could not have imagined that a stock like PayPal would take the level of the haircut it has from its 52-week high, right? How much more is there to give?
I don't know. But if you bought PayPal 6 months ago or 3 months ago, are you buying it now?
Well, and that's the $1 million question in my mind. I had,
What's changed? I mean, you're a fintech analyst. I mean, what has changed? Has their revenue gone down by 50%?
No, it hasn't. The fundamentals of the business isn't.
But the stock price has gone down by what, 75?
Yeah, I've lost.
Whatever it is.
I'm so scared now that I don't even open up to look.
Everything is cyclical, right? And I mean, markets are cyclical, business cycles, everything is cyclical. And so do I know what PayPal is going to be in, the price of PayPal is going to be in 12 months? No, I have no idea. But I kind of I believe that.
And you look at the fundamentals of the business.
Exactly.
Right. But at the same time, the fundamental of the business, there's also...
Well, they get repriced as well, right?
Yeah, they get repriced. There's a bit of oversupply in the market.
As they should.
Right, and there's a lot more competition than there might be consumption, right?
Sure.
And the fact of the matter is, a lot of people were being repriced because the consumption wasn't there to stack up against the consumption. So my take is, I think there's more pain in the market.
That's your take?
Right. Has that impacted volumes of trading?
No, I think we're still early enough that we haven't felt a massive shift. I mean, we're still growing and volumes are still relatively kind of stable.
Have you seen the narrowing of where people are investing?
You mean in terms of what they invest in?
Yeah.
No, I would say it's about...
So people are still as diversified?
Yeah, look, I mean, again, we're trying to build a long-term investment platform. And I think people are, I mean, what we're seeing is people kind of invest systematically over time. We don't see a lot of crazy trading or anything like that. And so that's,
Okay.
yeah.
So let's shift to crypto, right? Because how can we not have a conversation without talking about crypto, right? Again, I'm not asking you for any advice on crypto. So massive, there's been so much news in this region around digital currencies and crypto, basically, right? So, new regulations, a new authority being set up. We have had some global players like Binance who have set up shop in, several jurisdictions. If I'm not wrong, FTX is coming into the market. A number of homegrown players, Coin MENA, BitOasis, Rain, right? Exciting, right? So what's your whole take in terms, and I should say it's an area where education is still very limited, right? And you saw what just happened with Terra Luna, where people thought it was a stable coin. There was something called an algorithmic-based stable coin. God only knows I didn't know that either, right? Right. I thought stable coins were stable, and it's just proven that stable coins are not as stable, right?
Exactly.
They're very unstable. Well, not all of them, but this one was. What's kind of your, I want a commentator's view on crypto in this market.
Look, I think that it's still an industry in the very early stages, right? The first, second inning of a long life cycle. And industries like that go through flux, right? Even if you look at like markets in the 80s, right? They all had, certain bubbles or, certain rallies in different assets, penny stocks and, all these different things that happened over a long period of time. And people forget, right? And they go back. Generally, that's what tends to happen. I mean, if you think about crypto's probably very early on. Crypto, I think, for me, is not just buying tokens. There's a lot of other ways to utilize crypto. If you talk about payments, for instance, I mean, how many payments companies are there? How many exchange houses and payment processors are there? There's tons, right? Because there's a lot of money that moves in the market.
Yeah, crypto is software for me.
Exactly.
The vast majority of it, right?
Exactly. So I think you have to separate. Like buying.
So buying Bitcoin.
Well, Bitcoin and like other, altcoins that have another name that we can't use here, but I
don't know what that other name is, but we won't use it, right? So there's Bitcoin, but there's crypto. So your view is, but the whole point is that the whole crypto, market cap, 45% of the market cap of all cryptos is Bitcoin, right? And there are people who are ultimate believers in crypto, and others who, believers in Bitcoins, and the others who are on the other side of the segment. But in this market, right, there is a tremendous supply of exchange houses who want to enable. So are we actually going to see that level of investment go into crypto?
I don't necessarily think that these guys are, these global crypto exchanges are moving here so that they can service this market.
They want to use this to service the rest of the world.
I think they will service the rest of the world. They're using this as a global headquarters in some instances, and that's a feat in and of itself to bring all this kind of industry here.
And even the local players, do you think will do the same?
Possibly. I mean, I think everybody's got to carve out some kind of niche and figure out, which country or which product or, which segment that they serve, right? But I don't necessarily think that, Binance and FTX and these guys moved here so that they can service, a population of 10 million people or the broader region. I don't think that's the point.
I agree with you, yeah.
Right? I think that they're here to kind of use this as a base for different geographies around this country. And so that's a big market. When you think about that, how many people, within a 3-hour radius, 3 billion people or something like that? Is that fair?
But then you have obviously got the challenge here is that you've got countries like India, where there's all kinds of restrictions with what you can do. But yes, I agree.
Yeah. But how many people are actually investing? How many active wallets are there in crypto today globally?
I don't have a number. You do.
I don't have a number. Okay. I don't want to misspeak, but I think it's very, very small.
It is very small, yes,
compared to the global population. So I think if you believe in crypto, you think that the next 10 to 20 years there's kind of a crypto bull cycle
Yeah, no, I believe in
and so-
digital currencies entirely. I think CBDCs will be a reality before we can say it.
Absolutely.
I think stable coins, the stable ones, will actually get into mainstream very, very
Exactly.
quickly. I think the software which underpins crypto, which is sort of blockchain and so on and so forth, will be used for all sorts of things. I think Visa and MasterCard will try and do everything they can in terms of the interoperability between fiat and crypto, because they don't want to be sort of left out.
Yep.
So I do think that all of that will happen. But at the same time, I do think that there's a certain amount of education that needs to go out there for people who are actually taking direct exposure into crypto, because someone tweets and then we have a coin which goes through the roof, right? And what's the use of that coin? God only knows.
No, I agree with that.
Yeah, and that's what worries me. Well, it doesn't worry me that much, because at the end of the day, I haven't taken the moral responsibility of people putting away their life savings and putting it into a coin which has either got a cat or a dog or whatever else on top
Absolutely.
of it. It shifts. Last question, right? So a number of players in this market, right, have talked about launching their sort of avatar of what we might call a super app, right? And a number of them are now considering embedding wealth or trading, right? Do you think that'll fly? Or do you think the consumers will gravitate directly to a Baraka versus a Baraka which is white labeled within Arjun's super app?
I think the thing that is underestimated is that next generation consumers will rely or will work with brands or use brands that they consider to be of their own generation. Companies
And they trust.
Yeah. Companies that stand for the values that they believe in and communicate to them the way that they, want to be communicated with. And I don't think incumbents can replicate that to some degree. I mean, I think there's obviously some overlap and some will do a good job, but I really think I think the point that's underestimated is the point around culture and the point around kind of, communicating with the end user. And so if you've got a specific segment that you cater to, you should really try to do a good job of catering to that segment. And, big utilities and, big banks and incumbent brokers, they can modernize. There's no question about that. It's just that, does that user resonate? Do they resonate with that user? Or does that user resonate with their offering? And I think if you look at it in the US, there's Cash App and Robinhood and all of these different platforms, right? There's no shortage of access for anybody in the US. Schwab and all of these different providers, they all do zero commission now. Everybody does zero commission. So you have a lot of access. Any age, any demographic, anybody in the US can access maybe 20, 30, 40, 50 different platforms. But there are a couple of platforms that have done something very, very well and have been, something very significant. This is they've catered to a segment of the population. And it's not just about, offering a zero commission product. It is about a whole cultural element that I think is
No, I do agree.
It's not
with
easy
you.
to replicate.
And I think on wealth, and I'll be honest with you, I don't have a conclusive view on this, but my view here is a supermarket might launch a super app.
Yeah.
They might offer the option for you to do low cost, zero cost online trading. But I think what they will not be able to do is give the necessary education and comfort around that investment, right? I think that's more, to me, certain sections of financial services actually are going to be harder to kind of convince. I think those people will still revert back to a Robinhood or an eToro or whatever else you might want to, because I don't think online trading, as much as you might sort of call it gaming and gambling, is the same as someone giving you the ability to make a payment.
Absolutely.
Right? So I think the jury is out on it. And I think a number of players here will try. I think they will embed wealth as a part of their super app. I think a number of super apps which are coming out here in Saudi. I'm still not convinced whether they'll be able to attract the consumer to start using their app as the primary app to do WealthTech. In any case, that I was expecting that answer from you, but I sort of said my 2 cents worth. Feras, thanks for coming in.
Thank you for having me.
Right.
Always
a pleasure.
Thank you.
Right. And I hope I'm getting that same t-shirt.
You will.
Right.
For sure.
Right.
You can wear it on the show.
I can wear it on the show, actually. We're soon coming to an end on season 1. So maybe if there's a season 2, I'll wear that. So thank you for that.
Thank you.
Right. So everybody, I'd like to thank Feras for coming in today. It's a tricky conversation to talk about stocks and wealth while talking to someone who's got a WealthTech platform. So I do want to say it again. I put a disclaimer out there. I think neither one of us were trying to give any advice out here in terms of whether or not you should be buying equities, cryptos, NFTs, or whatever else we talked about. But with that, thanks to Feras, and thanks for you to listen in, and for those who are watching it on the video, well, thanks for watching the video. So goodbye till the next episode.